Hey everyone, we talked about this ahead of time, and last weekend it actually happened. The US, together with Israel, attacked Iran, and that obviously has real consequences. We'd already seen that crypto trades 24/7, and because of that, the swings were pretty muted. If anything, yesterday it moved even more clearly higher, even while we're watching this war unfold. Still, it's not leaving the markets untouched. What this could mean in the near term and how coins might react, I'll be talking about that over the next few minutes with Oliver Michel from...
Hi.
You said... You said in the last interview it's kind of an unwritten rule that no attacks get launched during the Olympics, and that's how it played out. The Olympics are over, and we've seen weekends in particular seem almost made for US military action. And we also saw Bitcoin and altcoins held up pretty well, at least up to today, even rallied a lot. How do you explain that?
Yeah, I think it's fair to say crypto passed a real stress test. Bitcoin had been sliding for quite a while, and once the military action kicked off, you could have expected, maybe even had to expect, it would get pushed down to 60,000, maybe into the 50s. But the exact opposite happened. Crypto didn't show any weakness on Saturday or Sunday, and yesterday, Monday, it actually showed solid strength. Like you said, we were up a good chunk. Yeah, and with that in mind, you can definitely stay positive and say, this is a solid base for things to bottom out in this space. That's what we want to look at today too.
We'll take a closer look at the charts in a bit. But first, let's go over the factors impacting the US market. Yesterday, we saw the first day of trading on Wall Street after the attack could have been a lot bloodier. Still, the signals today aren't exactly great right now, and this escalation obviously has real economic effects on the US and its outlook. Let's go through it step by step, because commodities especially are getting hit hard by this war.
Exactly. We dropped this slide in here because we're basically moving away from business as usual. Week after week, we track the normal indicators, how things are trending, how the US economy is doing, since that's a big driver for our crypto. But now that the Iran conflict has turned into a military situation, the whole system starts to wobble, and a few things shift automatically as a direct result of this breakout. I just summed those up here. First, oil prices go up. I think that's obvious to everyone. The Strait of Hormuz was shut down. Oil jumped 5% yesterday. Right now it's up another 5% too. And it's going to keep climbing. The moment oil prices go up, does that mean, and we always talk about the US since that's the key market for us, that gas gets more expensive? That means higher transport costs too. If goods have to be moved across the country, shipping gets pricier. And lastly, since oil is an input for making a lot of products, production costs end up higher too. All of that pushes inflation up. And when inflation rises, Johanna or inflation fears get stirred up again by oil and other things, and tariffs aren't totally off the table either. Does that still mean the Fed says rates stay where they are, higher for longer? That's kind of a downer for us because we're always hoping for cuts. So that's the direct fallout from what's happening down there right now. Oil is up, inflation will rise too, and that makes a rate cut less likely, like we'll see in a second.
You just said it, we're mostly looking at the US. But here we're feeling the Iran conflict and the fallout a lot more. The Strait of Hormuz, like you mentioned, was closed yesterday. 20% of global oil exports go through that bottleneck. And we saw oil is up 14% versus last week. It's even more extreme with gas prices up 45%. We feel that a lot more in Germany and Europe than Americans do, since with fracking they're a bit more insulated. Still, that market is crucial, and so is the currency. And we also see when oil rises, the dollar usually rises too.
Germany's crypto market doesn't move global prices at all. That's really driven by the US. With 50 to 60 million Americans and all the big institutions, it's the biggest capital market in the world, so we keep a close eye on the US market. No question, and that goes for us too, of course.
When the dollar climbs, like we've already seen, and when oil prices rise, that naturally gives the dollar and the DXY overall, the dollar against major world currencies, a real boost. What does it mean when the dollar is rising and we're also looking at those so-called supposedly safe havens?
Yeah, what definitely happens, Joanna, based on what's broken out, is investors look for liquidity. And the moment they go for liquidity, they move into the dollar. The dollar jumped hard yesterday, and right now it's climbing sharply again. It's up almost 2%, the whole move higher. So yeah, that's huge. We kept saying 96, 97, and now we're almost at 99 points. So our target zone, which we hit twice, and we kept asking, will the DXY go up or keep falling? The answer is clear now. In this scenario, it's going to keep rising. And it's simple. When the dollar rises, and it's rising hard right now, precious metals come under pressure because a strong dollar pushes down metal prices since they're quoted in US dollars. That's why gold is down, which we already saw yesterday. Down is kind of an overstatement though. It barely went up at all. This morning it's in the red, but what's dropping even more than gold is silver, because unlike gold, silver is a hybrid asset that isn't just used as a store of value, it's also used in industry. Silver goes into chips and circuit boards. And the moment you've got a global crisis, chaos, that obviously means production gets cut back and demand for silver drops. And then the silver price falls a lot more than gold, which we saw yesterday. And we're seeing again this morning. So in that sense, this all goes together as one block. And here, oil prices are basically the anchor that kicks everything off. And then you've got the stronger dollar, which brings the knock-on effects.
There was also a statement from Donald Trump yesterday evening or overnight that the biggest strikes are still ahead. We've seen it's this back and forth, and Iran obviously won't just let that slide. There were counterattacks. We saw a lot of targets getting hit, and uncertainty is clearly growing. Is there anything at all in this situation we can use to get a clearer read on what's going on?
Well, I mean, what's on the board here is all pretty negative, right? Because it's exactly what we don't need for crypto. If inflation rises, rates are going to stay high for longer. If the dollar goes up, we know dollar-based investments are real competition for crypto. That's not great either. The only good thing, of course, is the geopolitical picture is clearer now. People kept speculating whether there'd be an attack. That uncertainty was just always there. Now that uncertainty is gone, we know the attack happened. Now the question is, how long will this conflict, this military conflict, drag on? Is it a quick thing or more of a longer one? Most people are expecting it to be on the shorter side. And of course, as stupid and as paradoxical as it sounds, the uncertainty about what will happen and when it'll kick off is gone. Now we know it happened, and you can kind of move on again. Get back to business and say, okay, we're rotating back into risk assets.
With inflation rising, rates are basically staying where they are, at least in the near term. In this situation, that probably helps Jerome Powell, if you can even call it help, But with inflation expected to keep climbing, expectations for the Fed to change rate policy have basically dropped to zero, right?
Yeah, that's how it is. If Jerome Powell needed another excuse, he's got it now. The reason he's not going to do anything for the rest of his term, the Trump administration basically handed it to him. We'll see it on the 18th, the week after next. With near 100% odds, nothing will happen. And for April and June too, the assumption is nothing changes for now. The first real hope for a cut is July. So yeah. Yeah, inflation's back again, getting pushed up by oil prices, by tariffs. Yeah, and we'll see it in a second. The CPI, PPI, and PCE numbers are anything but good.
Let's stick with this table for a second. You just said that the next bit of hope won't come until summer. Could the whole picture flip if the new Fed chair gets put in place in May?
No, I don't think so. I mean, sure, he's the chair of the board, but it's a group, and at the end of the day, they vote. And it's a majority call. What he can do as chair is influence things, talk to the individual members, and try to get them to change their minds, and he'll definitely do that. But that doesn't mean the second he's in, rates get cut right away by 50, 75, or 100 basis points. If rates get cut in an unusual way, both in timing and in size, that's only because we're in an unusual situation. And in the past, when the US has gone to war, rates have been cut too. So there's at least some hope that could be used as an argument in the committee to push for rate cuts.
Let's look at the economic data. Last week was actually pretty solid on Wall Street. Nvidia's numbers were great, once again way above expectations, even though everyone thought there was no way they could top it. But Nvidia delivered, and I think that helped carry the big US indexes through the week. But we also got weak economic news in the PCE data, and this week we're expecting more inflation data, the January PPI, which could also be a drag.
Yeah, the PC numbers were released the week before last, and we already talked about them in last week's interview. They weren't good, meaning inflation's ticking back up. And last Friday we got the January PPI inflation data, and it's a similar picture there. Prior was 3.0, expected 2.6, and it came in at 2.9, so 2.9 is clearly higher than the 2.6 expected. And even worse, core was expected at 3.0 and came in at 3.6. So yeah, inflation slowly heating up again. Getting back to 2% is still a long way off. PPI is the producer price index, basically the price where producers sell at the end of the day before CPI comes out, the consumer price index where consumers end up paying. So yeah, that's not great. Especially if we're hoping for rate cuts, this is the last thing we need. The positive thing though, Johanna, was on Monday, meaning yesterday Monday, we got the PMI data from the ISM, the Purchasing Managers Index. And we've said before, for a lot of people, the PMI is basically the leading indicator for the business cycle. Depending on how PMI moves, you can talk about what kind of cycle we're in. We went into that in detail in the interview on February 3rd. So if you want to rewatch it, check out the Feb 3 interview. The point is, they basically ask purchasing managers in this big survey, what are production costs doing? What's hiring like? How's the outlook, the overall direction? And they roll that into a number. And in the moment when after the results, it's above 50. That's very positive. The economy's growing. And the moment it comes in below 50, things are basically slowing down and cooling off. And we'd actually been under 50 for years. And for the first time, last month, we were at 52.6. That was the first time in years we cleared the 50-point line, moving up to 52.6. That was the first time in years we cleared the 50-point line, moving up to 52.6. And now for the latest month, for February, 51.8 was expected, and it came in at 52.4. 52.4 is still a bit lower than 52.6, but it confirms we're staying above 50. And for a lot of people watching crypto, that's the key indicator, because whenever the PMI was above 50, Bitcoin ended up rising too. And like I said at the start, that can definitely be a positive sign, a little glimmer of hope that on the back of a move like this, Bitcoin might start climbing again.
Besides inflation and the overall state of the US economy, the Fed, of course, always keeps an eye on the labor market numbers. This week, we've still got jobs data coming up, even though the period's already over and we're only talking about it now. Tomorrow, Wednesday, we get the ADP report for the private sector, and that's usually seen as a bit of a preview for the big NFP, the non-farm payrolls, which drop for February this coming Friday. Lately, the labor market's been kind of mixed. And like so often, the numbers got revised again, so neither side really looks great. And the question is, if these come in weak again or below expectations, then the Fed might have to shift its tone a bit.
Yeah, because what's actually happening is this. On both sides of the scale, the thing that shouldn't happen is happening. Inflation is going up. They're keeping rates high to fight it, but it keeps climbing anyway. And then on the other side, they say, yeah, the labor market is strong, the economy is strong, it can handle high rates. But in reality, we'll probably see on Friday with NFP a weak number, maybe even another revision to last month. Unemployment will be back above 4%. So it's basically the worst case scenario. Inflation reaccelerating on one side and the job market weakening along with the economy underneath. That's why I think Jerome Powell is pretty happy if he can say, I've got 2 more meetings and then I'm out.
I was just about to say, I think he can already see the end of his term coming. Let's look at the US indexes from last week. Like I said earlier, we got the Nvidia numbers on Wednesday and they were great. We covered that too, and it helped keep the Dow, the S&P and the Nasdaq pretty upbeat through the week. And even yesterday, Monday, after the war broke out, wasn't as dramatic as it could have been. Sure, we saw a reaction, but it also flipped back the other way pretty quickly. Do you think there's more still coming, or is that still ahead of us?
Yeah. I think the market's in a pretty rough spot right now. Like I said, inflation's climbing, the job market's softening, the economy's slowing. Now you've got the Iran war on top of it. Then there's oil prices, the dollar, the whole system's wobbling. And at the end of the day, the US government and the Fed have to decide on which horse they're backing. I just hope they go with the economy and try to push it. And that basically means big rate cuts. That's what it takes. What we saw in the big 3 US indexes last week, I'll pull it up here on the Dow, was the run up into Wednesday, the Nvidia numbers, and then of course the slide back down into Friday, because everyone knew it. It is. The Olympics are over, like you said. Heading into the weekend, there's a good chance something hits. And nobody wants to be in the market then, so it was pretty clear. Week goes up, week goes down, and ends basically where it started. You can see it really well here on the Dow, on the S&P, and on the Nasdaq. What a lot of people probably didn't expect was that yesterday, Monday, that last green candle here was really green and pretty big too. Some folks probably expected worse signs, but today, if you look at the futures, everything's clearly red, like 1.5 to 2% across all 3, which is a lot, but we've got to wait for the afternoon until it actually gets going. So it's all swinging around. Even after Nvidia and the Iran conflict flared up last week, The US indexes are still holding up, and you can see it really clearly. The Dow is still about 1 point above the prior cycle's last all-time high, and the S&P is also sitting pretty high, just below the last cycle's all-time high. Same goes for the Nasdaq too, which is really important for us, right alongside the Russell. We said that was a key level, and this range is in play, so if it drops back into this zone again today, that's a solid base to push off from, and like I texted you, get back within striking distance of the final all-time highs. I heard a great line, the S&P has never lost a war, so it really is true that there are stats showing that within 60 to 90 days it starts to swing around, maybe dip a bit, but even with a war, it then tends to move back up pretty clearly. And that's exactly what I'm expecting here too. And I've been saying it for weeks and months. We're in the process of making a run at the final all-time highs based on the indicators we keep talking about. It'll grind higher, they'll push it up overall before this whole thing eventually rolls over. And yeah, last week's question still stands. How much of a pull can the US indexes still create for crypto? Because one thing is absolutely clear, Jana. When the big US indexes drop, our crypto drops too. I've been saying that for 2 years. And the second question is, how much runway do the big US indexes still give crypto, which might be trailing a little right now? Speaking of time, this is a rollover, not a crash, a rollover, a process that plays out over weeks and months before it finally drops. And that timing matters for our cryptos too.
We already covered those stats you just mentioned on our crypto channel, Crypto Insights, over the weekend. And we're keeping our followers posted. Like you said, we'll have to see how this develops. Right now, US futures are clearly in the red, and we break down everything important there day by day. It'll be interesting to see if this positive vibe holds up or if the red futures end up taking over.
Yeah, it's important, Joanna, to look at stats like that, to look back at how it's gone so far, to take a bit of the edge off the whole thing, to calm that fear of, oh man, war's starting and everything's gonna dump. A lot of the time, it's actually the opposite. It dips a bit, then it really starts to rip again, and that's exactly the last step we need here.
Oliver, besides the Dow, the S&P and the Nasdaq, we're also watching the Russell. That one's known for the riskier stuff, meaning smaller companies, so it's a solid indicator for our coins too. How's the Russell been doing, especially with the latest developments in Iran?
Nice. It had a solid Monday too, kind of like our cryptos. You can see it here, that's the second to last green candle. It did open down at first, of course, but then it worked its way up really nicely throughout the day. No doubt about it. So overall, that fit pretty well. The Russell looked a lot better yesterday than our big three when it comes to risk assets. So yeah, that was a really good sign. You've got to watch today too, though. Right now, it's back down about 2.5%, which is pretty noticeable. But like I said, it's been chopping around for a while now. We keep bringing up the Russell to show where we're at right now because, like you said, besides the Nasdaq, it's not the most important index for our cryptos. And you can see the Russell's bigger move. Those are the three big pushes we've been tracking for months. And here you can see the first push is done, the second push is done, and if you want, you can see a pattern forming here. And since the move is coming from below, the odds are pretty high it breaks out to the upside. And that'd be the final leg up, maybe toward the 1.618 extension, like this zone up here. That's where the final all-time high could land.
At 3,000?
Yeah, around 283, give or take. We've been saying all along it'd clear 2.7, and it did. Yeah, right now you can definitely call it one, We'll see that with Bitcoin in a second. You can even read it as kind of a wedge if you want, that then breaks out to the upside. For us, that's a clear sign liquidity's flowing into the market. Can't forget that. Just because we're talking about Iran and the conflict doesn't mean the Fed isn't pumping money into the market through repos. And of course, you're also seeing liquidity rotate away from cash, away from gold, away from silver maybe, into the dollar, but maybe also a bit into risk on assets like we saw with here with the Russell and then of course with crypto too. I've gone ahead and overlaid Bitcoin on it. Because let's say the two of them are moving pretty similarly. And you can see it, yeah. Here we had that tariff pullback when Trump got up there and said, I've got the
charts.
The charts, exactly, and then it dropped here. Both of them also ran up. And here you can see the 16th, that was Bitcoin's high, basically the supposed top of this cycle. And the Russell moved with it there too. Then the Russell pushed a bit further. And after that, it dropped together with Bitcoin. And you can say, up to here, they were still in sync. And from there, the Russell kept grinding higher while Bitcoin went sideways and then slid. So yeah, there's a bit of a decoupling there. I posted about this earlier. Was that a break in the cycles while the Russell keeps following its cycle like PMI, like we said? Is that basically a decoupling? Are our cryptos splitting off from what they've always tracked, like the NASDAQ and the Russell? And then last week there was this claim that there was massive manipulation by Jane Street, a high-frequency trading firm that always, around 10 a.m. US time, they started doing it with bots.
Selling.
Manipulating. That came out because they got charged with manipulation.
But not with Bitcoin, right?
In the Terra Luna case, they pulled something, they knew more, and basically, according to people from Terra Luna, they drove the project into the ground. And yeah, to be fair, Jane Street has already been convicted for manipulation in other countries too.
In India?
What did they do exactly? They'd always try to create bad sentiment right at the open in the morning, listing Bitcoin for sale, while at the same time loading up heavily on shorts. By putting that Bitcoin up for sale, they'd then dump the market lower, and the shorts would gain in value. Then they'd close the shorts at the bottom, and with that money, after the market had dropped hard, they'd buy Bitcoin spot again and push the whole thing back up that way. And apparently they must have made billions, they say. Do the math all the way back to October. And market watchers say that since the indictment on February 23rd, that effect has pretty clearly vanished. And it could be that this gap we saw opening up is partly due to that massive manipulation. Pure speculation, Johanna, maybe yes, maybe no. What matters is this spread has to close again, no question. The Russell's gonna move up, hit its all-time high, its final one. And for us, it's key that we get a move higher here. And don't just drop with Bitcoin and sit around until the Russell eventually rolls over too. And they meet way out on the right, way down low. So yeah, it's an interesting setup, an interesting chart, how they split, even though they should move in sync, what could have caused it, and hopefully they meet again somewhere up and to the right.
I actually think it's pretty fascinating, especially this Jane Street manipulation. We already went through it in detail on the crypto channel. People really only started paying attention because of that Terra Luna story. And then, of course, you start looking at what else they're doing. And if this 10 a.m. dump, this 10 in the morning manipulation is supposedly gone and hasn't shown up since, why are we still just chopping sideways? If that manipulation was the reason, even if it's just speculation, shouldn't that uncertainty be gone and Bitcoin start moving again?
Yeah, so right now they're moving in sync. Up here it's sitting in its wedge, and down here it's basically in a little mini wedge too, so they've been tracking together for a few days now, and that's definitely a good sign. And the moment this pushes up here toward the final move, then in theory, liquidity-wise, because both are fed by the exact same source, money flowing into the market, not just any money, but liquidity that's specifically looking for risk assets, the risk assets positioned in equities and the risk assets positioned in our crypto, meaning the moment it picks up here and that green move kicks in, Bitcoin should pick up too. That gap that maybe got created by the manipulation obviously won't just disappear right away. All it can really try is, if it hits its target with a flatter slope, maybe it can still grind higher with stronger performance.
Let's look at the whole thing with Bitcoin. We already saw Bitcoin was pretty, actually stable last week. It didn't really rev up into high gear. But we also saw the spot ETF did great with $800 million in inflows. And of course, some market participants and the big guys too are hoping that's the first sign the bottom is in, that it's safe to step back in, and that these indicators are clearly positive. Are you on board with that?
Kinda, yeah. Yeah, we're bottoming, sure. But forming a bottom isn't like we do this for 2 weeks and boom, bottom's in. If that was the bear market we saw from 126 down 52% to 60, then you need a bit more basing, like we'll see in the weekly in a second. What's actually pretty good right now is we saw that Bitcoin show real strength with the Iran conflict and the start of military action. You can see it in this green candle. That's the second to last candle, and you can really see it in the volume, yeah? It's not just kind of blinking along like this. There's some real volume coming in, and if you followed us long enough, you know we're, like always, stuck in a range. Yeah. Meaning we're just moving sideways in this zone, and last Wednesday we had a nice day with the Nvidia run-up. Then that info about the manipulation that might be getting unwound, and yesterday we also had a nice day, Bitcoin up 5% on the way up. We're above the, we pushed slightly above this line here from last Wednesday, so yeah, that was actually a pretty good sign. But forming a bottom is, we just need a bit more time. I still don't want to rule it out, Johanna. Downside routes are still possible. Just because we've got 2 nice green candles here doesn't mean much. We haven't seen any follow through. Normally, if it's really going up, like on the way down, you get several reds in a row. You'd need several greens in a row too. We don't have that yet. So it's still possible we drop back to 60,000, and we've talked about this plenty, that it could still dip into the high 50s to flush the stop losses and the leveraged longs. So down in this area, Johanna, we'll likely chop around for a while, and only if it breaks down here or breaks out up here can you say, okay, no bottom, it's going lower, or yes, a bottom, we're going up. We just have to wait. Personally, I'm assuming we're in the process of bottoming. Something's forming in this zone, and then we start moving up. Relief rally, like we talked about, the CME gaps are still open. We've got the weekly 100 SMA, the weekly 50 SMA, and the retracements. All of those are levels we can run into. And I'd really like to see us at least get up to the 786. We might get rejected there at the latest as part of that relief rally. If momentum stays really strong, my quiet hope is still that we roll into a continuation rally. Up to 140, 150. We'll see it in a second, broadening wedge. From a chart perspective, it's all still on the table. Over here on the right, you can see what's going on, and you nailed it at the start. This move, especially last week, isn't backed by some random noise. It's backed by real volume. And the spot Bitcoin ETFs help too, with about 800 in inflows.
Million
US dollars, that's pretty solid, and you can feel it. Demand is picking up, there's interest. And a base could start forming, but it's definitely not formed yet. But you can already make out certain structures.
If you're saying it still needs time, then yeah, you need a lot of patience and nerves. If we look at this on the weekly, what kind of time frame are we even talking about? Because we've already had a bunch of weeks, 6 red weeks in a row for Bitcoin. It'd be nice if a green one finally showed up soon.
Yeah, we've got Bitcoin on the weekly chart, and you can see it. Yeah, 6 red weekly candles. And we've got good reason to hope this week might finally turn green. It's looking pretty decent, especially if you look at the RSI. You can see the RSI was historically low if you compare it to the 22 low here. Nothing's gone lower than that so far, and we're starting to tick back up a bit. So we could see the start of a bounce sometime this week. But a bounce isn't like tomorrow, the day after, and maybe one more day. It's more like a bunch of days stretched over several weeks. That add up to a solid move higher. It's still like this. As of now, that was the top of this cycle, then the blow off in the falling bear market. Still looking for that lower low, and like you said, the bottom. The base building could end up similar to 2022. We've talked about that a lot. We had this drop here, just like we did here, with that spike into the 60s. And then you can see how a bottom formed here. If that was the absolute low, then yeah, it took quite a bit of time, exactly 4 months to get there.
Do you think we'll be forming the bottom for another 4 months now?
Could be. I don't know. It could happen faster. But in the last bear market, it took about that long too. We talked about it last week, 78% down to here, and then another 10% from here to here. So if we slide over here now and dip a bit more, then that would match the 2022 setup, that 2022 bottoming pattern. And of course, you can also look at it through the lens of the RSI. I'm a big fan of that. It's just like down here on the ground and wants to move up. This time it'll be different from back then, from what I'm saying now. A ton of liquidity is going to get pumped into the market. We're seeing rotation. Personally, I think gold and silver have basically hit their peaks and will drop over the next few weeks, which then rotates money into crypto. We'll see the US indices make their last push higher. That obviously pulls liquidity into the markets too, and we just saw the PMI back above 50 for the first time in years and holding there. And what I also think will boost the whole thing is, hopefully, we'll get legal clarity soon.
The Clarity Act.
Like the Clarity Act, for example. There's an insane amount of money sitting on the sidelines, which fits the point from before. Liquidity is flowing into the market. Before the midterms, they'll definitely try to get this done. And some people are saying something key could happen in March. And what matters, of course, is what I've always meant with the word commitment. It doesn't help to say, I'm just going to invest in some coin on a blockchain. It'd be great if blockchain finally got officially used in a major real-world business case, like with the US government, for example. So yeah, right now, there are a lot of things lined up that could make this process not take 4 months, but move faster, and that could mean we turn up sooner too, in terms of the bottoming we just talked about. And like I said, I don't mind repeating it. I'm sticking with my plan. we still have this 2, 3, 4, 5, that'd be the move up. And if that's a bull cycle, then what we've seen here could be a mid-cycle correction before it pushes higher again. That'd be great, but I'd also take a solid relief rally.
I'm good.
I'm good.
A relief rally usually means altcoins do a bit better than Bitcoin. But with geopolitics and all this uncertainty front and center right now, altcoins basically just follow Bitcoin. So how have Ethereum and with XRP in focus too, how have those two been doing with everything going on?
Yeah, just like you said, when Bitcoin drops or just goes sideways, it's enough if we see our altcoins basically limiting the damage, not falling too far. The moment Bitcoin starts moving, we're of course hoping our altcoins run even more. We've explained that a bunch of times. Damage control on Ethereum is basically like in the last interview on the weekly chart, and here you can see the 21 high, that was the high of the last cycle. And that was the bear market back then. Down once, twice, 3 times, meaning the whole move down to the bottom, basically from the 1 down to 0 was that correction. And we'd have a similar correction here now. Mm-hmm. So yeah, we've got a pretty solid analogy for what happened, and we're still in that same trend. Higher highs which were written and higher loss which were written. So in that sense, our East is basically in line with this whole development. And as far as the positive trend goes, it's doing really well. Right now it's fighting around the $2,000 level, which is definitely a psychological line. And I'm still stuck on this question. Do Bitcoin cycles even line up? I talked about that last Tuesday. If we assume Bitcoin has that 4-year cycle, and we saw the high query on October 6th, then this year's altcoin season, the altcoin rally, whatever you want to call it, just didn't happen. Question mark. As of right now, yeah, but based on what I just laid out, I'm assuming we'll still see a pretty strong move up in altcoins.
XLP's performance is set. That's no secret. You've got XLP up here on the monthly view, and you brought Bitcoin dominance back in too. Why?
Yeah, that's the monthly view for XRP. Same as last week, that 17th high. Christmas time in January were awesome when this thing just ripped higher. Then it was brutal until it dropped back down, like 96% off the top. And that's the one we always keep on the chart. And that's the 0. Yeah, that we've been carrying through all the weeks and months in this interview series. So that was the next one. Bull market and bear market. After that 96% drop here, we lost another 85% here. Mm-hmm. Like I said, this red candle here was the lawsuit. That's probably why we didn't push any higher. We would have likely topped out somewhere up here. Then it dropped back into the bear market, then we went sideways again, and then up here. Yeah, you can see it here on the monthly chart. That's 1, 2, 3, 4, 5, 6 straight months of red. And we're down 70% from the top now, so 96, 85, 70. We're already pretty far along. I said if we drop below 2, like 180, 160, 140, then it gets really thin, really thin. Yeah, that was basically this zone here. We just have to watch out if Bitcoin doesn't put in a bottom and drops into the low 60s or high 50s, then we'll definitely head down again. Down to $1. That's how it'll go. And Sure, for anyone who got in at 50, that's still 100%. But
Yeah.
if you got in at 2 or 3, you've basically cut your portfolio to a third. I can only warn everyone. I can only warn everyone. If you're looking at this spot here, and saying, yeah, I'm down, I'll see when I jump back in, I'm not quite ready yet. The moment you miss a month like this one, you're already halfway up.
über Weg gegangen.
Then the chance is basically gone. So with that in mind, especially given the backdrop of... Yeah, in Germany, tax-wise, sure. If you cash out now, you can take the profits you've got left, so to speak, tax-free. Then if it drops back to $1, you could jump back in and maybe catch a solid move on a monthly candle. But then if you want to sell up here, you'd have to pay taxes on that gain. So it's all personal stuff everyone has to weigh for themselves. And for me, it's clear I'm still up. I'm still in the tax-free window. And I'm assuming, and you can see it on the monthly chart, it usually goes like this. One huge candle, another huge candle, another one here and here. So since 2018, basically the whole XRP run up to here has been driven by 5 or 6 monthly candles. If you miss one of those, you miss a big chunk of the performance. That's why, in my opinion, it makes sense to stay in XRP at least to a certain extent. And what we're also seeing now, like you said, is Bitcoin dominance showing up again. Yeah, it dropped, then we went sideways, and you can see these 4 red weeks here. I was already kind of saying, okay, this is it now. Now it's going to fall, but with this week kicking off, Iran conflict and all, Bitcoin is once again the lead currency in our crypto scene. It was the first to bounce, the first to show strength. So the whole thing ran up here, and now I'm curious how it plays out over the week. But this could at least be the start of a move down from here. First below this level, then below this one. And if that happens, we're a lot further along, because then XRP will very likely be heading back up again too. We'll be seeing all of that now.
We don't have a schedule with us this week. Much to our cameraman's dismay, who's already suffered enough with that Dortmund loss while you were over here. Celebrating and poking at him, I just want to throw that in there. There's a word for that. Terrible co-worker. Anyway, we're skipping the schedule today because nothing's changed that we could have updated except the date, and you can spare that.
US indexes are moving sideways, Bitcoin's moving sideways, and the altcoins are just waiting. So there was nothing there I could mark green, yellow, or red. It's all basically just the same as it was.
But in the last few minutes, we've actually gone through pretty much every scenario objectively, positive and negative, up, down, all the routes you'd need to look at right now. That objective part also means you're still doing your thing, picking one of those paths or balancing them and positioning accordingly. So what's it look like for you?
Yeah, we're trying to separate the possible scenarios, good and bad, like you just said, from my personal positioning. What do I do with all these indicators? What conclusions do I draw from them? There are even some on our channel who sold at 120 Bitcoin. They took a totally different takeaway from what we said than I did. So we're trying to separate my opinion a bit from what scenarios are possible, and then everyone should decide for themselves based on that. My current takeaway from what happened over the weekend: Bitcoin and altcoins showed strength around the Iran conflict. You can say that loud and clear. A lot of people expected, even over the weekend, that it would just dump, and instead the exact opposite happened. There was huge demand. You could really see it, and that's a good sign too. And it backs up what you said earlier. We've got a real chance to form a base in this area. That doesn't mean we shoot straight up and say, yep, that was the bottom. We could still chop around a bit. like we'll probably see over the next few days. But on this base that's forming now, we could get a relief rally and an altcoin rally. For now, I'm sticking with a relief and an altcoin rally. And the continuation rally would basically be the
Die Kirsche auf der Sahne, genau.
like you put it so nicely. But this still isn't the bottom for a new bull market. I want to be clear on that. Meaning, even if we now, with Bitcoin, have dropped, builds a base here, and we get a relief rally, I personally don't think that was the bear market low, the bottom, and that will roll right into the next bull market.
You think we go sideways again?
I think we'll get a relief rally that either tops out or we move into a continuation rally that runs up to a certain point, and then we'll see the US indexes roll over, and we'll head lower together with the US indexes. So this base we're talking about here, that could form at this second point, isn't the bottom of what I think is still ahead of us, what we're going to see. The real bottom will be somewhere down here. But before we hit that bottom down here, I think we'll see US indexes move up, and Bitcoin and the alts will get either a relief rally or a continuation rally. Meaning they'll take another quick run here, I hope, before it then drops again together with the US indexes. So this bottom here, I don't think, is the start of a new big 3-year
Uptrend.
bull market. It's more like an in-between bottom, a mid-cycle correction, then we go up again to new all-time highs, or at least into the 105, 107, or $110,000 area on Bitcoin before then. And I still stand by this, even if I'm a bit off on timing. We head down with the US indexes. Maybe Donald Trump can still keep it propped up until the midterms. Though to be fair, midterm years are never good.
For the markets.
A market years, so I can totally see that at some point. Even he and his team won't be able to stop the whole thing. And then all the indicators we've been watching for weeks and months, almost for years now. We had our checklist last week of everything that's out of whack. That's going to make us start this move. Down here with the US indexes. And then our crypto follows right behind.
That's your
Das ist meine
stance. And of course not financial advice, because the situation...
Meine Schlussfolgerung. That's my takeaway from all of this for me and how I invest. So I want to try to get out up here, because if I already missed the exit back there, then I'd like to make up for it here.
Nachholen.
Should we do this one more time here? Yeah, just to be thorough. How this all really plays out, we'll have to keep an eye on over the next while. But of course, there's hope the fighting will end soon. And with that, our interview for today is at least over. Thanks so much for your insights, Oliver. And we'll see and talk again on Tuesday. Folks, I hope you've had enough patience and nerves to get through this too. Maybe we even helped calm things down a bit, and you'll be back with us next Tuesday. Thanks.